when you have a client who's worth a lot of money, we tend to think that they're in this great situation. But in reality, if they have to turn that large amount of wealth that may be illiquid into liquidity, there could be a massive issue there. There might not be a market. There might be a huge haircut if they can sell it. Someone might lowball them and they have no other options, or there might not even be an ability to sell, or they could even be limited in their ability to sell based on how they own the assets. What we wanted to really look at closer is when a wealthy person on paper has to come up with liquidity, a large amount of liquidity in a short amount of time. What does that do to a large estate?
I think what we're looking at is what happens to the value of the asset when you have that liquidity call, when you have the capital call and you have to have liquidity. You're going to lose the value of the asset probably more dramatically than even the liquidity need. If you need to raise a 40% tax, 40% of that value of the asset for liquidity, you're probably going to end up having to sell 60% of the asset to make up for the fact that you're liquidating in a short amount of time. When you're looking at publicly traded stock, you don't want to just dump a whole bunch of your stock onto the market because it's going to drive the value of the stock down. And what you're doing is raising liquidity when you drop it on the market, but you're paying an extra haircut for that immediate need for liquidity.
Well, it's interesting too, because there's certain assets, for example, if you sold a piece of real estate, you likely would get cash for that real estate. Now, granted, you might not get full price if you have to fire sale it. But most of the time, if you're selling a business, very few people are coming in paying 100% cash. They might be paying 50% cash, and maybe they want you to keep stock in your company or stock in their company.
Right.
So if you need 40% of the value of that business in liquidity to pay an estate tax, and even if you sold 100% for the full value, you might only get half of that amount in liquidity, in which case all that's going to go out the window to pay tax, and now you're stuck with zero liquidity.